Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 354 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today, I want to talk to you about something that is very, very fundamental, and that is why should we invest, right? Why do we invest? What is the purpose? What is the reason? Right? What is it actually doing for us? And I think it's a fair question because, a lot of times we have to talk people into, getting their money to work for them, right? Getting their money invested, getting their money growing for the long term for them. And one of the big reasons that you have to motivate people to do so is because they do not know why they should be investing. So I want to make that clear to you here today, and I want you to have a clear reasoning specifically as to why you should be motivated to invest and why you should start investing for yourself. So stick around for a discussion of all that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. Now, it's no surprise that I think investing is important. I talk about it all of the time on this show. But the big question for anything that you do, and especially anything that you do financially, is why, right? Why are we doing this? What is the purpose behind this thing that we're doing? And I think far too often we take that for granted with investing because we're like, duh, of course you should invest, right? But I do think there's a large amount of people out there who still want to know why. They want to know why they should invest. What's it actually doing for them? And I'm going to speak in generalizations today, but the reasoning may have a lot more to do with something specific in your life relative to the more general things that I'm going to talk about today. Right. But before we talk about why we should invest, I think it's important to just put a couple things at the forefront. Right. I think we should begin by talking about why investing and saving are not the same thing. Now, you can save money and invest it. Okay. So this is why it is tricky. Okay, you can be actively trying to save money for something and do so via your investments, right? You can do that, okay? But investing and saving are not the same thing. Saving is simply that act of putting the money away, right? It's simply taking the money and setting it aside for something. Okay, typically we do that within a money market account or a savings account, something that's not going to vary in value very much, okay? But investing something is doing it with a purpose, right? Is putting money away, but putting money away somewhere where you plan for it to grow and you plan for it to flourish, right? You plan to make some adequate rate of return. You plan on having your money be, relatively safe, right? You want to be safe enough. You want to have safety of your principal, but you want to make a return on your money. Right? And savings, right, is not trying to make a return on your money. It's just trying to set your money aside. So there's a very clear distinction between investing and saving, but sometimes we save our money by putting it into investments, right? So that's something that we need to be clear about. Is saving is the action of putting the money aside, but investing is actually putting the money to work. Then, not only right, should we talk quickly about investing and saving, but we also need to clear the air about investing versus speculating. Okay, because far too often when people hear the word investing, they're actually thinking about speculation, not investment, right? Ben Graham said back in 1934, An investment operation is one which, after thorough analysis, will provide an adequate return and safety of principal, right? So thorough analysis, adequate return, safety of principal, right? Those are the things that must be happening with investment. Anything else is speculation, right? So anything that we can't analyze or don't analyze is speculation, right? Anything that does not offer some adequate rate of return can be speculation. But typically, the things that we're speculating in are because we think they do provide some adequate rate of return, but they don't provide safety of principal, right? So the things that are typically missing are the analyzing of whatever it is, right? And then the safety of principal aspect of it when we call something speculation, right? Investing is something that has a general reasoning behind it, and it has a good chance of growing your money substantially over a long period of time. Speculating may grow your money by leaps and bounds, right? But it doesn't mean that it has to, right? So I'll give you an example. For example, putting money away in the S&P 500 over long periods of time, that's investing, right? And again, this requires you knowing what you invest in, analyzing what you invest in, and that's something that provides safety of principal and an adequate return over a long period of time. No question, that would be an investment. But something like cryptocurrency is speculation. And why do I say it's speculation? Because how are we analyzing cryptocurrency, right? I would say the vast majority of individuals aren't, right? And even those that are may be using very sketchy measures in order to do so, right? So how are we analyzing it? And if we can't, then it's speculation. And then what about safety of principal, right? Safety of principal is a key part to investing that I don't think you find with something like cryptocurrency. So that's just the differences between investing and speculating. And the reason I think that's important is that when we are identifying why we invest, right? We have to understand that we're not saying why do we speculate or why should somebody speculate. That's not what I'm saying. And I'm not saying why should somebody save money. That's not what I'm saying. I'm saying why should somebody invest? Why are we supposed to? Why do I believe that everyone should invest? Okay, and if we can make those distinctions, know that investing is not saving, know that investing is not speculating, then we can jump into these reasons why. These reasons why I believe that we should invest our money. And I'll just kick it off from the top. I have 9 things here, and no doubt there are plenty more, right? But the first reason why I think we should invest to protect our purchasing power. Okay, so we should invest to protect our purchasing power, which means nothing more than to protect the value of the money that we have. Okay, because we're in this situation right now, right, as we speak, where inflation is high. Okay, and inflation's higher than it's been in 30 years. We're getting another CPI reading here this week, so no telling what it's going to be, as of this week, but just naturally, the value of our money is going down on a nominal basis, okay? So if that's the case, then we have to fight against it, right? We have to fight against this decrease in purchasing power, right? When your money's less valuable, you have less purchasing power, meaning you can't purchase the same goods and services that you purchased before with the same amount of money, right? You have to have more money. Well, the only way you're going to have more money is if you make more income or you grow the money that you have, right? And so one of the biggest reasons that we should invest is to protect the purchasing power of our money, right? Because not only may we do it not in the short term, but in some shorter time period. We're talking about inflation today, but if you're just putting money into a savings account over a long period of time, and let's say you're not looking for any crazy rate of return, I mean, I understand, right? Let's say you're just, conservatively growing some money, growing a nest egg of money. I'm not mad at that. Maybe it wouldn't be what I do and wouldn't be what somebody with a reasonable risk tolerance would do. But if you're actively doing that, it's likely because you want to have money later on. Well, the problem with just putting money into a savings account is that it's never growing. And you may say, okay, well, what's wrong with it not growing? Well, if it never grows, that means it never keeps up with inflation. That means every dollar that you end up putting in there becomes less valuable over time. Even though you're stacking dollar bills up, it's becoming less and less valuable because you are losing purchasing power to inflation. And investing your money, allowing it to make an adequate rate of return, will allow you to protect yourself from decreases in purchasing power. Okay, so I think that's the first reason why we invest. The second reason is very, very clear and probably should have been my first reason, but the second reason is obvious, right? And it is to grow your capital, okay? And the question is like, okay, well, why do we need to grow our capital, okay? Well, the short answer is that we have things that we want to do in our lives, right? We have financial goals, which kind of brings me to the third thing that I have here, right? The third reason why we invest is to achieve our financial goals. And so I'll kind of tie 2 and 3 together here, right? We grow your capital in order to achieve your financial goals, okay? Because many of you want to send your kid to college, right? Many of you want to retire or retire early, right? Many of you want to leave money behind for your heirs, leave money for your kids, leave money for your grandkids, do big things for your kids and grandkids, right? Many of you want to, move up in lifestyle over time, right? Well, the absolute best way that we can do that, apart from just making, bukus of income, which is possible, by the way. Okay, it's possible to make income and to do some job, to do some profession that will allow you to continue bringing in cash flow, and you can achieve your financial goals that way, right? And you won't have to grow your capital. But for the vast majority of individuals who work normal jobs, who do normal things with their lives, the best way to get a step up, the best way to achieve their financial goals, the best way to pay for your kids' college, the best way to have money to retire on, the best way to retire early is to grow your capital, right? Is to invest your money for the future, right? Because you can make today's dollars more valuable in the future. Okay, because not only are we protecting our purchasing power, right? If we are outpacing inflation, then we are increasing the purchasing power of our money. Okay, and you invest over long periods of time, then that is even more and more so as money compounds, right? And so what this allows us to do, it allows us to do all the things that we've ever wanted to do in our financial life, right? And this only happens if we invest. It only happens if we are putting money away that we expect to grow and that we will not touch, and that will stay there and just continue to be a mainstay in our lives, okay? Because if you don't invest, you don't grow your capital, then again, what are we doing? We're putting money in a checking account or a savings account, which again is fine if you have enough of it, okay? But it's very difficult to meet your financial goals quickly if that's the case. So let me just give you a quick example, right? Let's say that, you want to retire in, let's say, 30 years, okay? And you decide that you are going to put away, over the next 30 years, you are going to put away, let's say, $500 a month, okay? And you begin with nothing. And let's say you invest that money in the stock market and it made 10% a year. You would have $1.13 million at the end of that 30 years. No slouch, right? Quite the nest egg buildup that you have there, okay? But let's say that, on the other hand, you had somebody that just put $500 into a high-yield savings account over the next 30 years that made 0.5% a year, right? That person is only going to have $194,000 in putting away the exact same amount of money than would the person who had $1.13 million. Okay, so it kind of ties together these first three things. We want to protect our purchasing power, but we want to grow our capital in order to achieve our financial goals, which brings me to the fourth thing: earn more than a savings account. Okay, savings accounts are killers to purchasing power at this point. Right? They are really not helping purchasing power at all. Okay, and given that that is the case, we need to find other ways to make sure that our money grows. Now, to be fair, right, if you're putting away $500 a month for 30 years, that's $180,000, right? So even if you put it in that 0.5% a year, I mean, you still make $14,000 over the course of that, saving or not investing, right? But that saving that you were doing. But if you were to have put it away and made 10% a year by truly investing, right, you would have just in earnings, right? Just in the money that you earned, you would have $950,000 or so of just growth, right? Which is crazy compared to the $14,000. Okay, so big reasons: invest your money. Now, I say that they earn more than a savings account, and that's a reason to invest, and it absolutely is. Okay, but what's the problem with that? The problem with that is that savings accounts still do have value. Okay, and the reason that they have value is because there are reasons to put money away, put money aside in true savings, right, that we don't touch, that we don't want to touch, and that we are going to have for a rainy day, right? Our emergency funds should be put into something like a savings account. But the money that we are looking to put away for long periods of time, for retirement, for our kids' college, for all those types of things, that should be in investment accounts, okay? So the first 4 things on my list: protect your purchasing power, grow your capital, achieve your financial goals, earn more than you could from a savings account. I think those are all good reasons why we should invest. Then the 5th reason why we should invest is to diversify your income. Now, what does this mean? Well, this means that investing can provide you with a new income stream, right? It can provide you with money that can come in that is not reliant on just your work, okay, which is nice, right? It's nice to have money that's not just reliant on one particular place of employment, okay? And this money can come from multiple places. It can come from dividend income that you make from investing in stocks and ETFs and things of the like, mutual funds, whatever, right? Things that do pay dividends. Or this could come from, the real estate that you've invested in that provides you with, the payments on that real estate, or bonds that you invest in that pay you interest, right? Regardless, you can have income streams from your investments, and that allow you to not be so reliant on the income that you make from your work. I think that's a good reason that we could invest, but it does take us some time to get to that point where you can properly diversify your income and not just be, siphoning off of your investments. Then the 6th reason that I think you should invest is because you are going to need money for retirement. And again, this is probably supposed to be way higher on this list, but I don't do things in any particular order, so here it is. You've got to have money for retirement. You have to have money in retirement. And I don't know about you, but I don't think that I want to rely on the government and Social Security, right, in order to pay my bills. And I don't want to rely on anybody else, like my kids or my grandkids or whomever else, right, to take care of me when I'm older. I want to have money in order to do the things that I need to do, and I want to enjoy the money that I've built up, okay? We all want to live at minimum a comfortable retirement, right? We want to live a retirement that's a lot of fun, hopefully. And the only way we can do that is if we have put away money actively for retirement. Okay. And again, I just showed you a moment ago how investing over a 30-year period can get you to some substantial wealth. And that's money that you could build up for retirement, right? Money that you could have in order to live on over a long period of time. And it is absolutely vital that we do this. This is one of the biggest reasons why we need to be investing, because we don't want to be a burden on our kids. We don't want to be a burden on our families. We want to be as self-sufficient financially as we can. And the only way that we can do that is if we take an active approach today, actively put money away, invest your money for the future, continue to grow it, and don't just again rely on the government or your workplace or whomever or whatever in order to have something waiting there for you. Build something for yourself, and you will not be sorry. Then the 7th reason why you should invest is you can have lower taxable income. And this is actually quite nice, okay? Having lower taxable income is quite nice, all right? And just let me take a step back for just a second. Saving for retirement, right? I say that's a reason that we should invest, right? It absolutely is, but you can get help saving for retirement if you are actively investing too, if you have like an employer match or something like that. So I just wanted to add that on, that, hey, you don't have to just be doing this by yourself. You just have to be putting forth the effort, and in a lot of cases, your employer will reward you for doing so. Nonetheless, lower taxable income, right? I think that's a really good reason to invest. Now, how can you have lower taxable income by investing? There's multiple ways, but let's start with traditional accounts, right? So a traditional 401k, traditional IRAs, and some of the other pre-tax accounts out there, they allow you to put money away that you will get a tax deduction for this year, right? It's pre-tax money, all right? You get a tax deduction for the money that you put in this year. That money grows tax deferred, and then you pay taxes on it when you take it out later on, okay? So you can lower your taxable income in the current by doing that. Well, you can also lower your future taxable income by doing what? By investing in Roth assets. Right. So, for instance, again, let's say that we're putting money in a Roth 401k, Roth 403b, Roth IRA, all these different things, right? We're putting in after-tax money, allowing the money to grow in a tax-free way, and then we can take the money out with no tax implications later on once we get past the threshold of the age at which you can take that money out, which differs between 401k and IRA, but look that up for yourself, right? So we can lower our taxable incomes. Not only that, right? If we take our money and we invest it in something, let's say, again, we're diversifying our income, and whatever the asset is paying us income in the way of dividends, in the way of rents, whatever, that's not going to be taxable in the same way that our general income may be, right? So you can lower your taxable income there. Or let's say you invest some money, you grow it for a few years, you take the money out, you made some gains, right? You don't have to pay taxes on those gains in the same way that you would your income, right? You can pay a lower rate, the capital gains tax rate on those gains, and have a lower taxable income than you would otherwise with that money, right? So this is a very good reason to invest because there are tax implications to doing so, and there are big tax helps, tax deductions, tax breaks, if you will, that you can get for just putting money away for yourself over a long period of time and investing for something like retirement. And then there's things like HSAs. HSAs, you can get lower taxable income today and lower taxable income when you take that money out because you don't pay taxes on the front end or the back end with those. So very useful, very good reason to invest. Then the eighth reason to invest is that we should help others achieve their goals. Okay, so you can invest in order to help others achieve their goals. And I think this is very big. It's very big to invest not just with yourself in mind, but with others in mind. Okay, because we can make a lasting impact with our investing. All right. And it can start with something as simple as, having a 529 set up for your grandchild or your children, right? Or having an UTMA or UGMA for your children or whomever, right? And having money set aside for somebody before they even know what's going on. Okay, that way you can give them a head start in life, right? That can help them to achieve their goals in a way that they don't yet have the foresight to do. Because me and my wife talk about this all the time. Our son is just shy of 6 months old, and we put money away for him, right? And he doesn't have a clue that we do that. And he won't for a long time have a clue that we do that, okay? But hopefully he'll be able to look back at some point and go, I'm glad that my parents did that. I'm glad that my parents helped me to achieve my goals, right? And that's just helping your children. We hope to help our grandchildren. And ultimately, right, We want to build nest eggs big enough that we can help whomever, however, right? And I think we should all have that goal, right? We should be outward looking with the money that we have. We should try to help others and help them to achieve their goals, especially if those are people that we care about. Go out, try to make the biggest impact with your money that you absolutely can, which brings me to the ninth reason that we should invest. And it is to support causes that are meaningful to you. Okay. We invest, we grow big nest eggs, we have money that we can support ourselves with, but ultimately we invest, we grow big nest eggs so that we can make an impact, right? That we can help the things that we couldn't have helped otherwise. So let's just go back to the example, right, of somebody putting away $500 a month. And let's say instead of 30 years, it was 40 years, right? You'll see the big difference that it makes. 40 years, you'd have somebody with $3.16 million, right, if they invested at 10%. But if they just put the money away at 0.5% in a savings account over 40 years, that would be $265,622. Okay, and the total amount that person would have put in would be $240,000. Okay. So ultimately, they had $2.922 million in growth of that money that they put away over that 40-year period. So you build this $3.16 million, and maybe you don't need all of it, right? Maybe you have the money that you need to sustain you over the long period of time. Maybe you don't need a bunch of it for retirement, whatever. Maybe you do use some of it for retirement, but you have plenty of room in that budget, right? You can use that money to make big impacts in things that you care about, right? If there are causes that you support, if there are religious things that you support, if there are things about healthcare, things about different activist groups that you support, then by all means make a big impact. And think about how you couldn't have made that impact if you didn't invest your money, right? So if you want to make an impact in big things that are bigger than yourself, then the only real way that we can do that is by investing over long periods of time, unless we have outrageous incomes. And again, most of us don't have outrageous incomes. We just invest long periods of time, and we build nest eggs so that we can do these types of things and make an impact with our money. So those are my 9 things, right? Protect your purchasing power, grow your capital, achieve your financial goals, earn more than you can from a savings account, diversify your income, save for retirement, lower your taxable income, help others achieve their goals, and support causes that are meaningful to you. Those are the reasons why I believe we should invest. Okay. My final thoughts on this are, there are a million reasons that you could probably come up with that might fall within these 9 things, might not. But we have to be investing, okay? You have to be investing. And I'm not saying where you're at today is the place to invest, right? Because if you are deeply in debt right now, right, investing should not be at the top of your priority list. If you don't have emergency fund money setting aside in savings, investing is not what you should be worrying about, right? If you aren't even creating a unique monthly budget, investing is not what you should be worrying about. Okay, you need to do some things to set up your financial foundation before you're too worried about investing and growing your money over a long period of time. But ultimately, that becomes a very big and very consistent part of your financial life over a long period, and it's just something that you do. It becomes part of your financial life, and it becomes just part of your life, and it's something that you do with your money every month, but we need to understand why. And even if you're somebody who is actively investing today, right? Maybe it's good to remember why. Remember why you're putting money away in the first place. Because if we understand why, then we're far more likely to do, right? And if we understand why, we're far more likely to continue doing whatever that particular thing is, okay? So understand why you're investing. Understand why it's important to invest. And continue doing so, and do it and make it a systematic part of your financial process, and you will not be sorry, because there will be some great outcomes if you do it consistently and you do it in ways that are historically proven. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching this show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.